Hey everybody, this is Casey. Thanks for tuning in. Today we're going to take a look at a quick analysis and get into some more good stuff. Let's tune in. What's up? What's up? What's up? Good morning, everybody. This is Casey. I hope you are doing well, and I hope that it has been a phenomenal week for you. I am here on Smart Trader using Smart Trader this morning to do an analysis, a top-down analysis of AUDCAD. If you're interested in taking a look at Smart Trader, I encourage you to click the link below this video. You'll get a trial for $4.95 to take a look and use the cool tools like Smart Fibonacci, Smart Support, Smart Resistance. I'll demonstrate some of that stuff in here. I really like this tool. It takes the guesswork out of placing fibs, placing support, resistance, all that good stuff. So I'm looking at Smart Trader and I'm looking at AUDCAD. And for those of you who are new to the channel, what I do is a top-down analysis on every single pair. And I'm sure you're probably wondering, like, why do you do top-down analysis? Well, the higher time frame controls the lower time frame. And so I want to have a good understanding of what's happening overall in the market before I go and I execute any trade. My goal is to preserve my capital. So the better understanding I have of what's happening in the market, the better chance of I have of being able to do that. So as always, I start my analysis looking for swing highs and swing lows. And the reason that I look for these is because I am looking for high probability areas where price has the potential to reverse. And a swing high is simply a fancy name for a 5-candle formation. It's 5 candles with a high center candle in the middle, 2 candles to the right that are lower, and 2 candles to the left that are lower. Now, it's not always going to look exactly like this, but as long as you have that technical definition met, where you have a high center candle and all the other candles are lower on 2 to the right, 2 to the left, that's a swing high. And the swing low is simply the inverse. I have a low center candle. I have 2 candles to the right that are higher, 2 candles to the left that are higher. That's a swing low. These are high probability areas where price has the potential to reverse. And so what I'm going to do, I go through each time frame and I look for this and I identify it. Now, Fibonacci is a tool that I use. My analysis is heavily based off of fib, and it has proven to work time and time again. If you're looking for a better understanding of how to use the Fibonacci tool, not only just for retracements, you know, I've had people come to this channel and tell me, oh, keep trading, you know, that 50% fib. That's not what we do. My group has in-depth training of how to use the fib for your best advantage, and it continues to prove to be a tool that is necessary and that we keep in our arsenal. So if you're interested in that, click the link below this video so that you can join our group and get access to our periodic no-cost trainings where we teach our methodology. So I am on the weekly. Right here up in the top left-hand corner, it tells me I'm on the weekly. I'm going to grab my Smart Fibonacci tool. This is my smart toolbox. So I have Smart Fib, Smart Channel, Smart Trend, Trend Lines, Smart Support, Smart Resistance, Smart Pivots, all that good stuff. But the only thing I want to look at today is the Smart Fib and the Smart Support and Resistance. So I'm going to go ahead, and the way you work this is you click above or below the last high. And so you click, and I've done that. And what does it do? It finds the low and it finds the high within this. Now, on this, looking at this from the weekly, I see that we have a setup that's happening right now. Obviously, this is a period that has happened. Like, it takes time for this stuff to play out because we are on the higher time frame. But again, you need the overall picture in order to determine how you're going to move in the market and be most efficient. Top-down analysis is not just for swing traders. It is for any type of traders. If you want to scalp, you still need to know what's going on in the higher time frame in order to, like I said, protect your capital and preserve it. So we have an A and a B boundary that is formed. If you're new, you're probably wondering, man, why does she have like these levels color coordinated? Well, it's real simple. Anything between this A-B boundary, I consider as an entry level. So this is an entry level. The 78.6 is an entry level. 61.8, 50, 38.2, and 23.6 are entry levels, right? In order to get into a trade. What's outside of this A-B boundary or outside of these black lines are take profit levels. So I know that if price reverses and we find support at the 78.6 Fibonacci level, I know that I'm going to plan to take buys up into what we call this level, the D extension. I know that I'm bullish on AUDCAD for the next 1,500 pips should price retrace to that level. Or for instance, if price retrace back to the 86 level, which is just below this in green, I know that I'm bullish from this level up until about the 0.969 area. I know that I'm looking for buys up into this level, right? And so Fibonacci can tell you so much more than what people traditionally think it's for and what it does. It provides, like, if I had no other tool, it would be my choice and it would be it, because you could do damage with the Fibonacci tool. So anywho, I'm looking at this setup and I see that we have an A-B boundary that's formed. After this B boundary has formed, we have a slight pullback. It doesn't even reach the 23.6 Fibonacci retracement level. And it seems like there was strong momentum, but not enough to carry it all the way to the matching extension, which is up here. And we see this quite often. We see that when there is strong momentum, we barely get a pullback. We see that price typically stalls here in this 118.127 zone. And this is, I'm circling it with my mouse. I hope you guys can see. And this is exactly what we had happen here. We had price retrace barely right here, and price stalled out here. Price tried to go make a deeper retracement. We still didn't quite make it to the 23.6, and we stalled out before hitting the matching D extension for this pullback level, which is not surprising. So when we see this, we typically see price want to retrace, make a deeper retracement before making a continuation to the upside. So my ideal targets where I want to see price come to, doesn't mean they will. I wish I could predict the market, y'all, but God didn't bless me with that talent. So I can tell you what I've seen before and what I would like to see in this instance. And so what I'm looking at is on the weekly, I want to see price come to the weekly 38.2, or even if we're lucky, the weekly 61.8. So I highlight this level at the 38.2 because I know that if price comes to this level, it can react here. Meaning, let me write this out. Hold on. Weekly 38.2. Let's get this there. And then I'm going to do the weekly 61.8. These are our sweet spots, man. Like, the reason these are sweet spots is because the 61.8 really is a sweet spot. 38.2 is cool, but I know that I need to pay attention to that 38.2 level because price could react there. Meaning that price could, let me grab my line tool, my trend line. So price could come here and we can see that boy jump from here and make a move to the upside to match or to get to that matching D extension, which would be, come on, computer. Okay, we leave that alone. Y'all know what I'm talking about. That it can reach this level here, or, we may see price make a deeper retracement to this weekly 6.8 and then make a move to the upside here, right? So, but I know for sure if price hits that weekly 38.2, we could see something happen. So overall, this is what I think we're going to see. We're going to see, there's some more that's happening up here that I'll break down for you. But I think that long term, what we're looking at is for price to come down deeper to one of these levels before we see a move back to the upside. So we've identified these levels. They're important. We know, overall that we may see price come to these levels. Now, I'm going to identify my significant high and my significant low on this time frame. Significant most recent high, significant most recent low. And so I can go into my toolbox and I can get my smart support and it'll show me where those levels are. And so what I'm going to do is I'm going to grab my, because these don't carry down through and you don't want your chart to get like super cluttered. So I'm going to pick the most relevant one. Now you got to keep in mind that you're going to go through several different time frames. And so I am going to only choose the one that I want to pay attention to now. So now I'm going to turn off the smart support because I got what I needed. This right here, right? And then I'm going to go into my smart resistance, and we're going through multiple time frames, and I want the most recent. Like, yes, it's showing me resistance levels up here, but we haven't been there in 4 years, right? So what I want to see is this level right here. This is my most extreme high, right? This is what I want to pay attention to. So I'm going to take off the smart resistance, and then I'm going to drop down to the lower time frame. I'm going to the daily. Now on the daily, I'm looking for the same thing. I am looking for my most significant levels between these two blue lines. That's what I'm looking for. And now I'm sitting here and I'm looking at this this fib sequence and how beautifully this played out. I'm looking right here. Let me zoom in so y'all can see. So we have an A boundary here. We have a B boundary here. We have price that pulled back to the 61.8 level. Remember I said this is our sweet spot? And look where price went. Price went exactly where it was supposed to go. It fell shy a couple pips. It didn't quite hit the D extension all the way on the lower time frame, but it came very close. So this was, I would have known, okay, I'm bullish for the next 739 pips. And it took, let's see, 78 days for this to happen. That's pretty dope though. And for those of y'all who be dogging Fibonacci, like, the fib is the truth. If you're not using fib, you're not, like, I can't say that because people have their own ways of trading, but I think of it as you're not really trading. Like, fib is the cheat sheet, the cheat code, everything you need. Like, between that and trend lines, like, you good. Okay. So, all right, let me get back focused. I'm sorry, y'all. What I want to do on this level is I want to find, again, my next most, like, critical zones. And so I see that here. And I'm going to change this over. I've already created templates, so I just go and use the template I created. And I want to match this to this smart resistance level. This is the level I'm most interested in. These are lower time frame levels that I'm going to identify later, but I don't need them for right now. I'm going to take off the smart support. I'm going to add smart resistance. And if I was doing this manually, which I think you still should learn, not rely totally on the software to do it for you. I have a high here. I have a low here. My next high is right here. So I'm going to identify this level as my daily resistance level. And then I'm going to turn this off. Right? And so I've got my daily color coded to red. So anywhere that I am, I can go log in and see where I am. You just have to memorize your colors. And it's not that many. I mean, we're looking at what, 4 different time frames. So I'm going to drop down to the 4 hour. And what I'm looking for in here is the same thing. My high and my next low. Now I can turn on my support and resistance, but I really don't need that at this point. Some people may. It's helpful to some. So I'm not going to knock it. But I see visually that's the level that I want to identify. And I think it may have, let me see, it may have given me something. Nope, we're on point. Yep, this is the next level. And you got to remember too that price comes to a zone, not a line. And so, yeah, keep that in mind. So I'm going to take this off. That's my 4 hour. And then I am going to back out so I can see, actually, yeah, let me back out just a little bit. So we got the 4 hour resistance, and I am looking and I see, and I'm backing out because I couldn't see this, you know, so tight in the setup. But I see my 4 hour support, or I may even choose that to be hourly support. We'll leave it. And it's a zone, not a line. So what I'm looking at is I see over here, like this area, and I don't need to zoom in to be able to see the candles. I'm looking at structure. People message me like, I can't see anything on your chart. Your candles are all smushed together. I'm looking at structure. I don't need to see the candles up close and personal. I can see what it's doing right here. So, okay. So I'm looking here. This was an area of resistance. Price dropped off. Then we broke through and it looks like we came back just to retest this area, right? So this is a zone. This is an area I want to pay attention to. And you see how when we were on the weekly, it was one big fib. And as we continue to drop down, it provides like the smaller fibs within that larger move for you, which is pretty dope. So we got the 4-hour markup. Yep. Okay. And now what I want to do is I want to add my trend line, because when price breaks the trend line, then I know that we're changing directions, right? And so this is what we got going on right here. I'm going to change this over to a solid line and change it to a dark gray. There we go. That line is a little too thick for me, but whatever. Whatever. Okay. All right. And let me go up. My eye is just naturally trained for the higher time frame. It's easier for me to see this way. You can apply the same methodology and these same principles to lower time frame. I just am a swing trader. So for me, it's more comfortable to see what's happening this way. And what I'm trying to see right now is where we are in the sequence. And so we finished this move. It was A, B. We got a shallow retracement here, and price is making a deeper retracement. I thought we were going to stop at the 61.8, but let me see what's happening on the higher time frame, because remember, higher time frame controls lower time frame. Okay, so on the daily, and I went to the higher time frame because I want to see what level we're at. So on the daily right now, we are at the 61.8 fib level. So price broke through structure, right? So we broke through this downtrend line. So this tells me that there's the direction of the market is changing, and now price has pulled back and we're at the 61.8 fib level. It's very possible that price could come back down deeper. It could even come back to this A before continuing up. But I would feel comfortable even if I executed a trade at this point, because this would be, that would be my stop loss. Now I'm not gonna, well, if you're trading off the daily, you technically do need to wait for a swing low to form, but you can go down to a lower time frame to see if you're getting your setup. Let's see. So this is the first move. Let me change this green. Okay. Let me push that up just a little bit. So we are looking at, how many pips is this if you were trading off the daily? It's about 100 pips, 99, not terrible. And then for a potential to earn 300 and what is that? Oh, there it is, 329. So I want to mark this level though. Let's mark this out. So this is a potential take profit zone. I'm gonna mark this potential. Lord. Potential take profit zone. Okay. Right. So this is a potential take profit zone. If, and that's only if, price respects this level right here that we're at, the 61.8, then I know my matching extension is here. If price makes a deeper retracement down to the 786 or the 86, then I adjust my take profit level. So, but in order for me to enter this, let me see what's happening on the down fib. I'm gonna get rid of this fib just because we know what's happening there. I want to see, did we hit an extension to the downside yet? We have not. So we had A, B, we had less than a 61.8. So price could reach this level here. It's probably coming back to test the backside of that trend line. We're probably coming like here and then making the move up. Let me change this. Uh-oh. Let me change this. Okay. And then going for, you know, whatever mood is going to be made. And you know, price doesn't go just straight up, straight down. Lord have mercy. Y'all know what I'm trying to say. Price moves in waves. Jesus. I am trying to like walk and chew gum at the same time and I'm having trouble. Lord. Okay. So the take profit level would adjust if price is going to make a deeper retracement than what we'd initially thought. Now, I can see it coming back to this area, testing the backside of this trend line, and then making a move up. Or by some miraculous way, it could find support at this level and then make the move up to the matching D extension. Now, I don't predict the market. I react based on what I see. And so I would need confirmation that this is a swing low in order to, if I was trading off this level. So if I'm trading at the 61.8 level here, so remember, let me get rid of this so y'all can follow what I'm saying. Let's see. Did I do that on a weekly or the daily? Hold on. Excuse me, y'all. It's freezing in Michigan. It's been raining like the whole week. So I got a little sniffle. Okay. So this is a 61.8. Like, even if I was to execute here, I would just adjust my position so that I could trade this with a 99 pip stop loss. So I wouldn't trade no standard on this. You know, that's $1,000 or $750 I'm standing to lose. But I would adjust my position size based off of my trading account and execute a position based off of here. And then I probably would just go in small at this point and wait to see if we actually get that swing low and then start scaling into the trade as we see price start to reverse. So overall, like, this is where I think, well, if price respects this level, I think we're headed up to this level. And just looking at structure, this is a level of support. This zone is a level of support. If we look left, let me stretch this across. If I look left, yeah, this is a level of support. So I'm interested in what's going to happen here. I am going to put a down fib on here, but I'm going to get rid of some of these fibs so that y'all are not confused by what I'm doing. And I'm going to grab the smart fib tool, put it over the last high. I'm going to go up just because I was looking at the weekly so y'all can see what I see. Hold on. Oh no, this is too small. Yeah, so let me do this up. That's not what I want. Yeah, that's not. Let me see. Hold on. And we don't have a swing low yet on the monthly, which is why it's not giving me a fib. So we had a B boundary right here. Price pulled back to the 50% fib line and we hit a D extension. So we're likely going to get a retracement. And what I'm trying to see is where we were on the downside, what fib level this would be. But we don't have, and we do have, let me see. Hold on, if I can get it. There we go. Okay. So on this time frame, we have a B boundary. Price made a shallow retracement. So we didn't even hit that 38.2 on the downside. We hit a 23.6, right? And so price stalled out at the 118 and the 127. It did not have enough momentum to push down to the 618 D extension. And so this level that we identified before we even put this down fib on for this leg right here, if we find support at this level, it's very likely that we could see price pull back to the 61.8 level, which is right around 95671, or we could see price reverse and go to the downside from 94499. we could see that happen. So we could see price do one of these, go all the way up to the 61.8 and come down to this daily before we see what price is going to do. Or if we don't hold at this level, you know, we adjust our take profits based off of our entry. So I'm assuming that if we do find support here, it's likely that we'll either get one of two of these moves. So there's potential. I think overall what we're going to see is a move to the downside. But first, we have to do this corrective move before we continue to the downside. So this is what I'm thinking for AUDCAD. I think we got a short buy opportunity for 250. Hold on. 250 so pips. Or 200. Or what is this, 317 for a larger move that I'm anticipating. You know, if we take it off the 38.2, then we're looking at a potential sell opportunity for about 500 pips to 500 pips to potentially 900 pips. So I think AUDCAD is setting up for something really good to happen. And I hope that you guys are plugged in and will be able to take advantage of what you see in the marketplace. Again, if you are not a part of the Facebook Forex Mastermind group, I encourage you to click the link below and then check your spam filter or your email inbox for the link to join. And then if you're looking for some free training, no cost training, you'll want to make sure that you click the link below this video. October 23rd, in just 4 weeks, Ryan, Benny, and I will be putting on a no cost training. It's a day long. It's 8 hours, guys, of nonstop Forex information. Make sure you sign up for that. Seats are limited. It is first come, first serve. So if you have any slight interest, I encourage you to go ahead, complete that form, and you'll be sent detailed instructions on your next move. So I appreciate you guys for watching. If this video was helpful in any way, consider subscribing to the channel. Also give it a thumbs up. It helps syndicate this information to more people who are looking for training like yourself. And then I will see you on the next video. I hope you have a phenomenal day, and I will catch you soon. Bye.